Spread traders, what's up? All right, great. To make up for a little bit of time off from not talking about spreads, we'll just do a couple of strategies today, looking at charts, how we like to look at some macro, come in off of our weekly and monthly swings, look for an opportunity to spread that's directional, just putting on a simple calendar. So what we're going to start doing here, I want to just focus on calendars. Guess what? It's going to be more affordable for everybody. And including the small account, I have like a 10K I'm doing one on right now with a long sugar spread that almost got stopped out this week, but rallied back up. We'll take a look at that too. But I want to stick with calendars on our spread journey along, going to spreads until we start getting over 100K portfolio to $250,000 portfolio. And if we get some big money coming in here that wants us to trade, then we'll look at inner commodities. We'll go crossing products, wheat to corn, cattle to hog. Why? Margins is more expensive and risk rewards are going to be more expensive. It's going to be larger. Risk will be larger, but reward will be greater. But still, it takes ample more money. We're going to keep it simple. We're going to go directional. So everybody knows I'm busy with the day trading department. Day trading myself, a funded account. I work at Bookmap part-time. I don't know. Order flow is kind of something that's coming together for me in conjunction with my process every day in that market. Nothing easy. But, you stick with the plan and process. You kind of keep your head in above water or making money over the long run. So let's talk a little bit about how we've got the screen up here. Yep, I got that. Going through my TradingView account, I like to just kind of keep a lot more watch list stuff on TradingView. Additionally, I got Pro Plus, so I could put on a spread if I need to, if I want to look at it from here. But I'm not really doing too much of the spread dissecting here. At that point, I'm hopping over to either spreadcharts.com or Season Algo. I just picked up another 6-month subscription of Season Algo, and it's been running great. It's what I was originally used to years ago when I was teaching people this. This was the system we were using before Pavel and them came up with spread charts. They're all over there in Europe where my wife's from. And so I think I'm going to move these over. Just let me get set up. I'll move these over like this. So, yeah. Okay. First things first, not all these markets are the same. They're funky. Like, you're not going to find that you can directionally trade a spread on every single instrument, number one. And you should keep a little limited on instruments. But when we come to spread and portfolios, that's when you could look a little bit more at multi-products because you're given things time to work. There's not an opportunity in every market at all times. But still, the way that some of their term structure and contract months are, and new crop, old crop, some of them work a little funky and inverse to what the outright does. And so you want to do a lot of back test and research on that before. Obviously, I'm going to be here to shortcut everybody's way through that. But, so you want to pick stuff that's very liquid, crude, that, where the term structure moves with the supply demand of the front cash month, and, or heavy agriculture that maybe trades like quarterly expiry versus some of these one-off ones I noticed with soybean where it's more than quarterly. It's not monthly, but it's just like 7 or 8 months. Very odd. Anyways, just because I've been watching these things for years and things like that. What we're going to do, and some of my lines disappeared on a lot of these things. I don't know why. I'll give you guys an example here of how we're doing supply-demand lines. Am I going to do that now? Or I have other videos, guys, for that. We want to focus on the thing. So let's come over here to start with our sugar spread. Okay, so sugar spread. We, on a seasonality, expect a move up towards the end of the year. We got in a little bit early on the spread itself. And again, because I'm so damn busy with the day trade department, figured, well, Man, just hang on. Figure I could take an extra start on it, because sometimes these spreads will gang up on you and take off before that seasonal entry that some of the guys are looking at. So I was looking at it on a little bit more technical. So my stop was risk like 2 to make 3. Right now, it's not looking like we're going to end up that way. We got saved out of a stop on Friday. We're like almost at a tick to it, and then we had this big rally in sugar, and the spread itself went up, as you see here, like 13 ticks. My goal is to, at this point, get up to a parity level for sugar to continue rallying, break out, maybe start making its way towards the 29s or 30s. At that point, taking out these sellers here, maybe hit their liquidity, get ourselves up to the 30s. And then what that's going to do to our spread is move us up into that parity line, which is what I'm trying to get to. And that's kind of clear it's more clear on the spread chart thing, but at the same time, I have a profile inside of my, where I trade and execute all of my spreads with TradePro Trinity, which is basically open outcry. Anyway, like this is kind of what I'm talking about right here. This top here, it's 0.00. That's the goal. If I can just get around there, I might front run it a little bit. I'm going to just close this one out. Okay, and just look for more trades. Now, let's get rid of sugar. What we want to do coming into the week 2, and I don't know how we're going to coordinate all this schedule and time between the day trader department and bringing these swings in, but we had a nice rally on crude spread, okay, because of this monthly swing that crude hit over here down at 75.5, 79.5 during the week, the prior week, and all week we had this rally up testing these highs of the weekly swing. What that did, if you were just seasonally spreading, and this is why you cannot just be a seasonal spreader. I mean, you use that as something, but that's not everything. Let me take a random September-December crude. No, let me put on a November-December crude spread here. And I'll drop this down and you guys can see what I'm doing. We'll go to our calendars. We're not going to do no flies or none of that stuff. If anybody asks me to do any of that stuff, I might just ignore you. Sorry, don't take it personal. I'm overwhelmed with my own trading career, and I'm doing this stuff to share. So if you guys were here looking at, some kind of continuation because you thought this thing will just sell, and you're looking at the November D spread, you were wrong, and you're going to slowly be wrong. This wasn't going to whip you out that much. Some of the volatility at a crude is gone. The margin on them is still expensive to hold overnight. One contract's like $7,000. I'm going to show you guys another reason why we're doing spreads, so for you to get the best cash on cash return on your money. Okay, and so you can't always account on seasonality all the time. But if it's more like at a bottom, perhaps. Yeah, because demand issues can pop up, and you want to be on the side of more demand versus a supply. Demand is usually the thing that ends up happening where that backwardation or that contango becomes backwardated suddenly with some news or event that makes that front month more expensive. And so, if you bought this thing down at the parity levels, you are doing really good right now on this spread. In fact, you would have had to roll several times because this thing rolls monthly, but you would be up, let's say, around $730. Now I want to put this into note. This move down here from July 1st to this move on August 29th, I'm going to take it down here somewhere around July or June, whatever, 1st, and count this move up to the top up here is 17 handles. It's like $17,000. Well, what's like 10% of that? It's about $700, right? So you're making way less on these moves, but your margin is also less for that reason because the risk. And I'm going to give you guys an example of the margin calculator. If I added, let's say, November 23, it's going to be a different kind of a thing here. GCL. The tickers are different everywhere you guys work. You got to just work with what you guys have. So if we did X23, let's say we're just going to buy that one. We're buying one, right? So it's going to cost us about $7,040 to hold this contract. So, and the move too, remember, depending on who you are. You know, if you're a big player from Monaco out there at Key West, Florida watching this, I understand your portfolio is bigger, but average traders that are trying to adapt and come in and learn this and, you know, be a little bit less risk, they might want to do a spread. And in fact, you guys are probably doing spreads too. And so what you're going to do is, let's say we go and spread this across D's. So you're going to sell D's to make the balance. Okay. Now you have a $440 cost. So again, you see it's like less than even 10%. The same time that move made you a little bit more than 100% cash on cash. Yeah. So it still works relative. And so this is really an important thing to consider, you know, putting on spread is obviously, you know, when you're spreading the same product across 2 months, the exchange understands that the risk is a little bit less because, and let me clarify this, all trades are risk, but this is less risk because it's not outright. It's not just sitting by itself. And another thing is you can put stops on these and you'll find a lot more volume in crude oil spreads. I mean, you'll find like 200-300 contracts a tick on a crude oil spread, whereas on the outright you won't. So these are great ways where then at that point you can say, oh, a question's going to probably pop up. Well, then can I max these out if I have like, you know, 40 grand? Well, it doesn't mean you buy 40 of them because now your risk is still, you're exposed to much more than your account size. So doesn't mean just max out your margin, but you manage your account the same way you would manage like RR, risk reward. So however much you're willing to risk, if you're wrong, then you can use that as a multiplier on how many contracts you should buy. You know, theoretically, example, 5 contracts or whatever. Okay. And, you know, and it's a nice move and it takes time to work some of these weeks. And, anyway, I'll give you another example. So we go down the list here. Let's go into agriculture. Let's go back into agriculture. Look at wheat or corn or something like this. So, you know, these are big moves again. Looks like we're coming up here down around a daily swing low that I have drawn. Okay, we're in the 570s. And wheat on the December-March contracts, it trades quarterly just like the equities do. Looks like, lo and behold, it's coming around a period of seasonality, right, to go long. Now, again, not everything is seasonality. You got to confirm, you know, what your thoughts are and your reasons. And this thing can make you, you know, a few $100 a spread, your risk being very minimal, you know. But then also you can accumulate more contracts, again, if needed. This is a tight spread. You're going front month, back month with the demand into December. So, again, I'll give you an example here of margin, you know. Just get rid of these guys, and let's say we're going to add a December wheat, W23, Z23, to March. And it just by itself, it's about $3,300. So we're going to add March, and we're going to sell that one, right? Because our direction was bullish on the spread, let's say. Okay, and now we're reduced by about 90%. So, so essentially too, cash on cash return wise, if this trade worked out and you waited till a technical area here, at this point here on the wheat, this is a continuous chart. And so you feel it's going to go back and retest the 7s or up in the 8th or whatever. The seasonality is showing that, so you have another confirmation. Another thing you can do is look at COT and stuff like this. I'm not the best expert at them. They're not timing tools, so for this kind of trading, you know, investing, you know, it's actually could be very viable because, again, like COT doesn't work intraday. It's more of an accumulation, more of a swing trade confirmation tool to see if commercials or versus non-commercials are quite extended on their money. Why? Because there's only so many commercials can buy or sell and so many non-commercials. Bankers can drop in on a commodity and have full open interest in it. You know, they're not going to come in and a new bank going to open up tomorrow and just dump another like 3,000-4,000 contract open interest on something they never traded before. So the key players are usually maxing themselves out in those. And so to keep an eye on that too is another confirmation that you can use to say, hey man, I'm at a technical level, my seasonality's looking good, this and this, this and this. I'm going to try to go for this trade long, okay? Everybody is looking around from the day trade world probably and saying, this is just crap, this is not a lot of money. This is swing trading your long-term portfolio. If you're making money with your intraday, great. Or if you're not making money with intraday, great too, because this is an opportunity or something that you might consider might work out for you better. And so, again, you can trade stuff like this and live a regular life, manage these once a day, manage these 15, 20 minutes a day or whatever, or even once a week, you know, let these things work out. And for the guys that are making money through trading or other businesses, it's a way for you to self-direct, manage your own money. You know, obviously with everything going on these days with these accounting firms and all that crap out there, people have lost trust. They're just a little concerned. Markets, you know, markets go down and go up. Markets go up to go down. Eventually all markets go up, blah, 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 because they delist companies and put the better companies in place. Okay, I get all that crap, but people want to self-direct, manage their own money. There's family offices out there that have their portfolio in commercial real estate or something super tied up and they want to diversify. You can do spreads for your family office and allocate several million towards a diversified amount of spreads and let them work out for you. Again, cash on cash returns on these sometime, in my opinion, are greater than real estate, okay, than real estate investing. Just depends what you're investing on. Every niche, every department has its own sub niches and stuff. So I'm not going to sit here and rain on real estate. I've made a ton of money on real estate since I was 21. So just on my personal homes I've lived in, building equity, moving them around and things like this. So I'm not going to rain on any real estate. I'm just saying that there's family office investments out there, firms that would love to trade, and this is the way they like to do it. Trust me, I talked to guys recently in Monaco, 7-figure earners, that are looking for skill sets like this. So it's not as volatile as day trading, but you're still engaged in all the commodities. Anyway, other than that, I'm not going to keep repeating that in every video. I'm just making this spread video because I've kind of lost touch with some of the plans we had for putting out like a spread trading weekly, kind of like a newsletter, that I will do all this work and find these and say, here's what I'm finding, that and the reasons why in this example on wheat, and just say, I think great potential long, keep an eye on this because of this and this and this. A lot of people, you know, pay a lot of money for this kind of advice because they don't do it or they don't know it exists, etc. One of the goals I always had was to teach everybody to do that. But there's only so much you can teach somebody, and then, you know, there's a bigger responsibility that comes with it. It's better to kind of make it more, I thought, as a newsletter based. That way you can learn along and self-direct yourself as you go. And so you're learning to manage this and find these on your own, eventually become independent. And I think it's like a fair game. But anyway, our next thing that we'll be doing is going through a lot more of these spreads. I want to take a look at cotton. Some of these, like I said, are funky, so I haven't looked at this in a while. Let's say June 28th cotton. I want to look at what the cotton spread has been doing. Let's look at its closest buy calendar. Yeah, again, this is like soybean. This is one of the ones that has quite a bit of different months traded. not a lot of action in a spread. Let's go October D's. Nothing pretty. Again, I've been finding that these contracts, these markets that have more than quarterly expiration, or not like crude that's as popular and heavy, they don't follow along really well with the direction of price per se. I guess we could say they do. It's just their liquidity is not that greatest. So if we zoom in on, what was this, June 30th, couple of points still made there. It's just not the most exciting thing, but same thing, you want to get in on cotton, you don't know how or whatever, you just don't have the margin to pay for that. Well, these are, by the way, really nice rotations on a daily chart. I mean, it's really nice rotations. It's not going to make as big of a move on the cotton here, but we're looking at this structure here on the end of June up to the top. If we calculate what that would have been, maybe not much. Well, $1,300, more or less. I'm kind of being conservative per spread. Let's take a look at what that would have cost to just get in one of these. What are we doing? VZ. You gotta finesse some of these tools. You just can't let it scare you. I mean, it's not gonna take any trades. This is part of the open outcry margin calculator that we have at Trade Pro Trinity here out of Austin, Texas. This is where I trade my spreads out of. More information on my website. I just put links to people that I use. Z. So as soon as we sell that contract, that cuts down some of the amount required to hold that. So, I mean, you're holding that for July, June, end of June, so July, August. We're just at September. So this took 60 days to work out. All hypothetical theory, whatever I'm showing here. But it's $1,330. You made almost 100% of your initial risk put in. Doesn't mean that there's not more you can risk. You can get up tomorrow and cotton had something happen. You're on the other side. What could happen is, again, all risk is unlimited, but the calendar spread is what I'm trying to say is you can put a stop in the dome and keep it good till canceled. So that's the cool thing. It's not synthetic. It's exchange recognized. So another cool thing is these ICE products, like I'm trading right now, sugar. I'm not paying the $115 or $125 ICE exchange data. If that question comes up and you guys are wondering, what I do is I trade it. It's on a 15-minute delay, but I trade it once I'm looking at my analysis, and in 15 minutes I know, hey, this is around the price I want to be for my entry. So then I'll pull up a dome on the broker platform, and I'll put my order in on a dome. And I don't even need like level 2. I just see that front price there that traded in the last 15 minutes. It's relative to my analysis that I want to get in at minus 23, make my way up to, wherever. So I'll just put in that initial order there, resting limit order. And sometimes you get filled, sometimes not. The sugar spread, it took me like a couple attempts to get filled. Especially then I go back into my day trading, and then sugar closes at 12 noon. So that's it for now. So this is what we'll do. You guys want more of this? And by the way, if you see any value in this, don't just put a thumbs up. Please share this in your groups. There's some of you guys that have groups that have sophisticated guys that are interested in this kind of stuff that would appreciate the content. If you find that your friends and groups that would appreciate this kind of content, this is professional kind of trading. This is not some hocus pocus shit. Then share it, to the guys, because I have friends. I'm always willing to make friends with guys that are very savvy about finance and love this stuff. If you have anybody, just share it to them and ask them to subscribe and like it too, because we don't make a lot of content that often. I get on a roll, and then I got to start working on my day trading, and that takes a toll on me during the week. And so then weekends come, and I build these up out of excitement and thrill that these things are great. By the way, looking at cotton, we do see that this range here, like a 1 year range, finally did break. You want to watch these kind of things. Does it break back down? Does it continue back up into this into some of these like moves that we have here? Am I missing data? No, it was just big gap. So there's our highs. We're in the lows. Finally breaking out. Maybe make some highs again. But again, these highs up here happen because of all that like Ukraine, Russia stuff. No, it did to a lot of the grains. But if you go back out, just zoom out into like a monthly, and we can see, we're kind of in the middle of this lower range with a couple of times where we had this big demand, and these are usually some geopolitical stuff. So we're kind of making it up towards this range. I'd be looking for things to do when we get up there, for example, right? Things to do when we get up here. I'd be trying to line that up in the future. Let's see what a future contract spread looks like. Let's go out into like, let's do like a March, July. If it even looks like anything, it's going to be too thin to probably look like right here. This one might look a little bit. You'd be looking for something to come into context here, like, later during the winter. Okay, and then sell cotton back down. Additionally, too, if you're new at this, you can always go to what the company recommends. And every month they have a certain their algorithm will pick up certain recommendations. You can put those on a list. You don't want to get too over analytical because you'll convince yourself to not take anything. You can do analysis paralysis on these swing trades as well, and you'll end up confusing yourself out of a trade. For example, let's take this hog spread. Okay, you take this hog spread, you pull up the chart, and you go, okay, I want to go ahead and do some analysis on this. And let's say you go to continuation charts. And here's kind of where I like to see peaks and valleys, like bottoms and tops of them. And here's some time where you'll usually find a spread that is actually a spread that'll work out really good, but then in a continuation chart, you'll be stuck in the middle. And this is where I was getting stuck coming back into the game several weeks ago. I had alerts set on super wide ranges on stuff. In fact, here's an alert that did go off. Obviously, I ignored because these were triggered on cocoa and corn. Let's just take a look at corn. Okay, I put something way over here on buying this thing at minus 15. It's still at minus 16.75, so almost 2 points down. What I'm doing and this was a great rip down, by the way. So this trade idea came up, and we didn't see it earlier in the year, and it was a great sell. If I could open this thing up, CCU corn. Right there. I mean, if you took this thing down, you made like $1,350 a spread if you took it down at the right time. I was looking for this bottom, and to see if there's enough life left in the contract at this point, September. There still is to take a ride up, but then I was looking at this continuation, and so here's where I got set an alert. See, so we're at the bottom here. Can we make a way up? Well, I mean, what's the only way to go? Okay. So then that's a form of analysis. Now, where am I at on corn? Okay. Getting close. So corn could make more move back down, or it could find support now at this area that used to be a lot of resistance before. All right. Lastly, since this one's lines are missing, I'll go ahead and just draw these up real quick. Put it on a line chart. Monthly. And just go to the latest swings when you first start. I have these templated, saved. Weekly swing being a thicker number 2 line. And then I'll lock them all up once I'm done. This is a weekly swing. Don't have to be super pretty about it. Click on it. That's my, that's my monthly swings. Lock that up, fix this. As you see, my monthly swing is double thickness. Locked up, that's it. A little bit of a curved swing there. That's my monthly swing. It's putting a little tag here I created. So when I glance at it too, I know what it is. Lock that up. I have another kind of a monthly swing around here. Just going to crunch them all together for now. That's my monthly swing. Lock it up. Maybe I'll use this too. Should. Don't ignore an important area. Shouldn't, but don't overdo it. I used to overdo these. This is kind of a spot. So what we'll just do on this one, so I'll put it just on the swing that broke. Go to our weekly, just find a few more prominent spots. We got this spot. Was there anything down here? This is a level that did break. So we want to watch this. I'll show you guys. Here's your weekly. Lock that guy up too. This could be next level down, so make sure we get our next level down. That it broke. You guys got to do the work to get the decent pay. You know, you want a good payday, you have to have some work done on these. You know, I'm going to keep this level clear. That's it. Put it back on your candles. Go back to your daily. All right. So, and lock them all. There you go. So, we're under this weekly swing that broke. Didn't respect certain things here. Monthly swing broke back down. We're in this weekly swing kind of level here. And there was hardly any volume ever traded here once before, but there is volume accumulating. So, you know, unlike equities, man, these things could have a little bit different price action. There was a lot of volume here at 420. So we're looking for something. What are we looking for? I don't know what. We're kind of still in the middle of shit. But the point is we're at a bottom overall of like this last couple of years range still. You know, in agriculture and things, you know, due to inflation and stuff, their pricing and channels change because of cost. So it's something to consider to look at, like as a buy eventually here in this area. Back up. Look at the continuation chart. Okay. We're at a bottom. So finding a spread that you can take back up to the long side that makes sense seasonally, technically, and, you know, you can look at a continuation and obviously see, hey, we're at a bottom. So, I mean, there could always be more bottom, but chances are we go to the tops. So that's about it right there. However, be mindful that August 30th, September rolls. So you want to probably be looking at December, March contracts. I'm going to build that out real quick, because that changes the whole game. So now you're doing your homework like this. Don't forget to change your years. Don't forget all that stuff. What do we got here? So this is what I would put on our trade alerts. So what's the possibility? So now you have a chance that March December versus March, and this one's going to have a lot more price expansion here. Or maybe it won't, but maybe it will. No, not as much. Less price expansion. But anyway, like really low risk trade that you can get and make almost your margin money back cash on cash. I think these are great spreads, and the great way to get practice is to put them on these calendars. Okay, guys? So that's a little bit of a weekend catch up for you guys that want to learn about swings, have a good swing trade in your portfolio, maybe a bunch of them, and let your longer term portfolio, mid long term portfolio grow and accumulate more money coming from other people's money from somewhere else. Could you imagine that? You're making money from somewhere else. You're dumping it in this self-directed portfolio, and you're spitting off other ideas and making more money off that money. That's about it. Everybody, have a good Labor Day. I hope you enjoyed this spread trading session. Be sure to put like, subscribe, all that stuff. If you find value in this, share it to all your big boy moneymaker friends. Share it with, if you're here and like you're struggling and you don't want to touch day trading no more, I understand. Dump it. Go and share this with your friends. See what you guys think. It's not that hard, and you can still go out and do other side hustles and make money, and build this business up. Okay. I'm not a big advocate of options. This is how I discovered spreads years ago. It was by accident. And then I had sent several of my first initial spreads over to like Tom Sosnoff, actually to Pete Malmoot, former seat of the Chicago Mercantiles Education Board, which was working with Tom. And I had emailed him back and forth years ago, and he was confirming my ideas. So it really gave me a lot of motivation when big guys like that and smart guys will respond back and confirm my thoughts and ideas on stuff I had only learned by accident and from books. So, yeah. So, anyway, I hope you find value with this. Please share it out there, guys, with people. There's a lot of, this is a great ton of information that you can do something with. All right. Later.